you need to consider is that the cross currents of a very strong fundamental backdrop are still going to be playing out in the markets with these trade tensions. And the trade tensions doesn't mean that it reaches a acute point in the next week or two, right? This is likely to play out over an extended period of time with trade negotiations. And I think that this morning's data, really illustrates the upside for markets, right? Markets are up more than 0.5%, or at least the futures are. And why? It's because the trade tensions have eased a little bit. And there's some discussion of negotiations around the auto tariffs, right? So the fundamental backdrop for stocks is still good, right? Earnings are up, should be up around 19-20% for the year. The economy looks like it grew between 3 and 4%. And importantly, valuations now are getting more interesting, right? I mean, we've had with almost 20% profit growth this year and markets up 2. That means the price to earnings ratio for the market is now down to 16 times earnings, lower than it was before the election, the November 2016 election. So you put that all together, and the risk reward still looks reasonably good.
16 though, that's like a 5-year average, though, right? For the S&P 500, you're talking about a 16 forward PE.
Yeah, we would say 16 is an attractive multiple in the context of an interest rate under 3%.
But shouldn't there be embedded in that valuation a discount for the possibility of a trade war? Because I mean, you make the point that a trade war won't be resolved in 2 weeks. It almost would be better if there was some resolution, bad or good, in 2 weeks, as opposed to being dragged on for an undetermined amount of time, where the markets will face a lot of uncertainty, and businesses, more importantly, will face a lot of uncertainty in terms of making their plans.
You're absolutely right. One of the risks is, of course, a bad outcome in trade. The other risk is that business sentiment starts to sour and affect purchasing decisions and investment decisions. If the view from businesses is that there will be a very negative outcome. Keep in mind, though, all the tariffs we're talking about to date really subtract less than 0.1% of GDP. So even if we get the $34 billion in tariffs tomorrow, which looks likely, and a retaliation from China, this is still small potatoes in the grand scheme of the global economy. The real risk is significant escalation, or the real risk, another secondary risk, is the indirect effect of companies starting to rein in their investment spending given soured sentiment.
I look at you, and I think you were right for so long on U.S. equities. You stayed long when other people weren't. But I look at you now, and all I see is a Bitcoin bull. Do you wish you hadn't treaded into that arena? You must get tons of mail one way or another on this, don't you? What is your forecast? 100,000 on this?
25,000 by
25,
right?
Yes.
I mean,
is that where you were going to go? See, I went there for you.
I was going right there.
He wanted to go there.
That's where I wanted to go.
Okay, well, first,
I feel like we missed it, by the way. Remember when I said we should buy some when it was under 6,000? Were you here for this?
You liked it at 10,000, though.
No, but 6,000 was my number, and then I didn't do anything about it. I don't think we're allowed to do anything about it.
10,000 on the way to 20 or 10,000 on the way down for 20?
No, he was most excited on 10,000.
Oh, I know. Mohammed Al-Arian was on, and he said he would buy 5.
Oh, 5.
He was waiting for 5, and I said, you're getting greedy. Wait for 6, and you got it.
Yes, first of all, we still do equity. Right? So,
I'm asking, do you regret that you ever made any comments on this? Or?
No, I don't, because to me, digital money and blockchain is a multi-decade story.
Is it really?
Yes. So I think we're in the early stages. And this is not that different than stocks
in the 90s or 1970s, though?
It might be the 80s, right? And I did wireless in the 90s. And so I saw, 20 years of mobile and internet convergence. So to me, this is not that different. I think the reason Bitcoin looks really good here is the cost of mining is around 7,000 fully loaded, and the difficulty is rising. So by the end of the year, it's going to be close to 9,000. Bitcoin's historically traded at 2.5 times its mining cost. So it's not out of the question that it could be over 20,000 by the end of the year at fair value.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.